Welcome back to the Dividend Diplomats YouTube channel, everybody. You got Bert and Laney here, the Dividend Diplomats. Today, we are about to talk to you about the big oil companies, big cash flow, and hopefully big dividends.
Smash that subscribe button. Give old Bert the Hurt and Big L a nice thumbs up. We can't wait to talk to you about big oil and what this could mean for dividend investors in 2021, baby.
Yeah, that's right, Laney. We are very excited here. And what is prompting this topic? There's a lot of things going on in the oil sector right now. I don't know about you, but I can tell you this. If you've gone to fill up your car for some gas lately, what have you noticed about the price? The price per gallon? It has gone up, up, and up. Man, it's almost $3 for us, and that's far cry from the $2 it was just a few months ago, Lanny. But
Yeah, I know. I just filled up for $2.89 today here on Easter.
yeah, it's crazy that oil is climbing up there. Well, that's obviously hurting our pocketbooks and our savings rates and what can possibly be invested into our dividend growth stock portfolios. You know who benefits from this, and you know who gets pumped up about this. Your Exxon Mobils, your Chevrons, your BPs, your Royal Dutch Shell, and all the other major oil companies that have been desperate for this top line revenue that has been taken away from them over the last year.
They give it, they take it. No, but as Bert said, oil price has gone a little wild. I mean, you guys remember this time last year during the pandemic, oil at one point was trading in the futures market at negative due to a storage issue, and it's now gone way up to what, Bert? Is it over $60 a barrel right now for oil?
Yeah, I believe so. I feel like I was just talking about how it was over 50 and it felt like a week ago, but yeah, now it's up over 60.
And actually, I mean, yeah, less than 2 months ago, it was finally crushing through 50. So I feel like each and every like 3 to 4 weeks, you're seeing like not like 2 or 3% increments, but like 10 to 20% jumps in the price per barrel, which obviously is hurting your wallet at the pump, but could be doing very well for shareholders in the oil industry right now.
And why is this so important and why do we keep focusing on this? One of the largest players in this, the only remaining dividend aristocrat out there is Exxon Mobil, and they just released some news giving you some indicators of the impact that this may have on the company's earnings when they release it here in the coming month. They gave a quick little preview, a quick little chart or two, and with the SEC that seemed to cause some major headways over the last week that we wanted to feature. So let's compare this to some of the major charges they had in Q4, which is what they highlighted. Due to impairments, due to the price per oil back in Q4, they had negative $20 billion impact against the company's earnings. In yikes. However, where's that changing going forward? That's actually showing a lot of positive news here, which is why we are so excited as dividend investors for Exxon Mobil. Just to highlight a few of them, they're saying that the oil price climbing is going to impact operating results by 1.6 billion to 2 billion versus last quarter. The increase in natural gas prices are given another 300 million to 700 million. And that's even then trickling through some of their other business. There you are at the money again, Lanny. And it's even hitting other business sectors by almost 2 billion combined. Yeah. But all right, so I read off those numbers and what do they mean and why is it so important? Think about it. We're no longer having negative $20 billion flows against a company's equity to now positive, and they're seeing the numbers turn heavily in the other direction.
Yeah, so again, we're focused on some big oil players here. As we all know, Exxon increased that dividend last year.
No,
Oh man, that was a quick answer.
they did not.
But did Chevron increase that dividend last year?
Nope.
Sorry, maybe that was a rhetorical question, but
Hey, wait, Lanny, ask me about Shell.
but what did Shell do in I think it was April or May last year?
Well, I was going to say on a technicality, they increased their dividend, but that was long after they slashed that dividend in April and May last year.
To give you a frame of mind, in the middle of March last year, Exxon was trading at one point at $32.74 a share. Fast forward to today, their share price is now $57.39. So going up a nice solid $25 per share over this short 1 year.
Yeah. And why is this so important? Why do we keep focusing on Exxon? I mentioned Shell cut their dividend, BP cut their dividend. Lord knows that Oxy's dividend is long gone. But yeah, but so many other oil companies slashed their dividend and cut their dividend when the price per barrel fell last year. Exxon and Chevron and what Kinder Morgan, just a few, are the few companies that are just hanging by a thread. They have not cut the dividend. They are still maintaining their current payout to shareholders along with their current massive debt loads on their balance sheet. So they're hanging tight. They've been waiting for the price per barrel to rebound to see if they can get that relief so they don't have to make that choice to cut the dividend. And that's why this news from Exxon was so important, seeing these potential positive results, because it gives us hope for the dividend that they're not going to cut it. And maybe even in the short term, there may be an increase in a couple quarters down the road. Maybe. I don't want to get too far ahead of us
At one point, I thought you were about to say, living on a prayer.
yet. That is my go-to karaoke song when the times come.
Watching the oil price, and when it hit like 30 or 40, they're like, we're halfway there. So what does that mean for the dividend diplomats, and why are we talking to you about it? Well, we wanted to look at the top two, or at least I know Bert's top two. I would argue that they are the top two oil companies right now, based here in the US. One probably has a much better balance sheet than the other. One, I always would say, oh yeah, you're probably better off buying this versus one. We wanted to run them through a little bit of a dividend diplomat stock screener just to see kind of what they look like now before even knowing that results could actually be improving in the future, right, Bert?
That's correct. So we'll run them through our stock screener, which are three simple metrics: PE ratio less than the S&P 500, payout ratio less than 60%. I can't wait to see that number for this one. And then a history of increasing dividends, where we look at the dividend growth history and the dividend growth rate. And then we'll throw in the fourth metric, the bonus yield here. So the two companies, Exxon Mobil, ticker symbol XOM, and Chevron, ticker symbol CVX. Man, I almost stumbled there with the ticker for some reason. But
Probably stumbling because they usually aren't in the discussion lately with great dividend positivity. So
yeah, that's true. So let's jump right into that first metric. The time we're recording this video, Exxon stock price, 57.39. Their forward earnings per Yahoo Finance, which we always use in there for the current year, $3.03. That gives you a PE ratio of just under 19x, compared to Chevron, whose stock price is 105.75. Forward earnings of 538. That gives you a PE ratio of 19.6, so just under 20, way below the S&P 500, which just clipped 40x. But it's kind of cool to see the two of them trading side by side. Not much of a difference there between the two.
Not much of a difference. Could say it's a sign of undervaluation, but it seems like that's probably par for right now for the oil industry, somewhere around 20 price to earnings. When we slide into that dividend payout ratio, that's when things get very interesting. Exxon Mobil, XOM, pays a current annual dividend of $3.48. Obviously, divide that by 4 over the 4 quarters. Whereas, Chevron currently pays an annual dividend throughout the 4 quarters of $5.16. So rewinding back, that forward EPS for Exxon was $3.03. They're paying $3.48. Bert, what does this mean?
Well, that means there's a reason why people are following any news that comes from Exxon Mobil saying that there's positive earnings forecast going forward, because a payout ratio of over 100% is not sustainable in the long run. Eventually, something is going to have to give. Earnings have to increase to cover that dividend, or the dividend has to go backwards with a dreaded dividend cut. So again, that is why we are talking about this today, because any potential positive sign in Exxon's earnings and a huge shock to help cover that dividend will give every one of us investors a huge sigh of relief.
And who knows? I mean, this could have already been built into the stock price, which again has almost increased 100% since March 20th of last year. sliding into the Chevron's payout ratio, they're still hanging in below 100% at a nice, healthy 96%, Bert.
Hey, it's below 100.
It is below 100, and
It's
but
still
yeah,
very close. I mean, they're in the same boat as Exxon, in my opinion. A little bit better, a little bit, but not material.
oil, yeah, oil is you could have made an interesting play in 2020 during the pandemic, knowing that, oh yeah, these companies are probably going to be around, but there still always is that fear or sign of consolidation. And Bert, you can correct me if I'm wrong, but I believe at one point Exxon and Chevron had a little discussion about joining forces.
That would have been insane. Yeah, when that news story came out, that was incredible to read. But again, I mean, yeah, you could have said that about so many of the companies back in 2020. I don't know if I would have hitched my wagon to the sector that had a negative price per barrel at the time.
Right, right. So, again, the excitement is that the earnings could go up or be better than what's anticipated. Again, a payout ratio of over 100% definitely is not sustainable. Bert and I have, kind of a not witnessed or understood that, but we've actually experienced payout ratios over 100%, and we maybe even each called one or two in our times where we're like, at some point they either got to cut it, but we're not bringing up those yet.
Nope,
Uh,
that'll be a different video.
So, but what about that dividend growth history and
I mean,
average growth rate?
Exxon's got a little bit of time left to keep their aristocrat status. Not much, but a little bit of time. So we'll see what happens with the dividend. Chevron, they were a former dividend aristocrat, but a few years ago they had a year where they didn't increase their dividend. So now their streak is just a little bit older than my daughter, I guess.
Oh
At
my.
3. Yeah.
Oh, hey, the Undertaker didn't have a 20-year streak, right out the bat. So Chevron's got to start somewhere.
Yeah, but I'd like to see I'd like to see Undertaker work on getting through 2 dividend aristocrat streaks in the span of his career.
Uh,
But well, let's look ahead to the yield, that fourth one. Oh, I guess we skipped the dividend growth. Hold on. Let's just take a quick look at the dividend growth rates here before we jump into that bonus metric. The 5-year dividend growth rate for Exxon's 3.6%. Chevron's, factoring in those years of no dividend growth, is 3.48%. So again, not the highest growth rates. Their growth rates right now in the last year are 0 because they haven't increased that dividend, but we'll see.
Interesting. So you're pretty much neck and neck there. And then when you take a look at that bonus metric, even though I don't know if we call it a bonus metric since they didn't pass many of the metrics before.
The hypothetical bonus metric.
Dividend yield for X is still blistering at 6+% right now, 6.06. Chevron hanging in tight just under 5% at 4.88%. So Bert, do you want to give us a summary of these two dogs?
Summarize. PE ratio for Exxon, just under 19. Payout ratio, over 100. Dividend history, an aristocrat for maybe not much longer, but they maybe still could be an aristocrat. Their 5-year average dividend growth rate is 3.6%. Chevron PE ratio 19.6. Payout ratio 96%. What's a history of increasing dividends for 3 years, and a dividend growth rate of similar to Exxon of under 4% as well.
Again, I know right now I'd have to say that I'm not touching oil myself right now. I mean, I actually have a large position in Royal Dutch Shell. My wife does own Exxon Mobil in her account. I do also own Kinder Morgan, KMI. So I feel like I've got a lot of oil at play here. What about you, Bert?
I've taken the shotgun approach to the oil market and basically just invested in all the big ones. So I'm pretty good on oil right now. But
Well,
with
which
that being, what do you say?
One's your favorite?
They're all my favorite. All my dividend stocks are equally favorite in my portfolio, except for Verit. That's a different video topic as well. I do not own them anymore. But in all seriousness, to circle this back, the key focus is what is going to come out of the earnings release when it's released for Exxon, for Chevron, and all the major oil companies. We'll see, are the results baked into those forward earnings? Was that $3.03 and the $5.38 reflective of the current oil market environment and the price per barrel? Because if it's not, if those are under, or those are lower than what's actually happening at these companies, which we'll find out here soon, we're going to see those payout ratios drop, and there's going to be a lot of great news for dividend investors. So that's why what Exxon released last week was such a big deal. It might give us a window into some positivity in the sector.
You know, I would have to argue that it's probably baked in a little bit because obviously we're having tens and 20 billion plus dollars of losses throughout the pandemic. Heading into this last week of March, first few days of April, the news did, I think, pop up Exxon's price a little bit. So again, one would argue that, one could argue that the earnings that the analysts are expecting are, obviously it's hard to anticipate. So I really think once we see that first quarter earnings, it's going to shock everybody.
Yeah, we'll see. So everyone, let us know what you think about the oil sector. Are you buying big oil? Did you buy big oil in 2020 when Exxon was trading in the 30s and Chevron was trading lower? What's your take? Is it built in? Are the gas price increases already baked into this? Are you touching any of these companies now? We're going to be very curious. Please let us know in the comment section.
I know we don't always recommend a buy or even a watch on our Dividend Diplomat YouTube videos, but this is us just giving you the facts and kind of where we stand personally, because again, this is all about personal finance, right, Bert?
Yep, there's no right or wrong answer. All that matters is, well, actually, no, sometimes there is a right or a wrong answer, but in this scenario, we'll see how this one plays out.
1 + 1 is 3. Again, if you have any questions for Bert and I, leave them down in the comments, shoot us a message, give us a thumbs up. If you happen to like this video, we wanted to get something to you about oil, especially as we head into the first quarter earnings release season, which is set to start within the next 2 weeks. So just get ready for some volatility because this is the first quarter of 2021, kind of almost towards the tail end of the global pandemic from COVID-19. Big oil making big impacts here. So we'll have to see kind of where they stand. And this was Bert's great idea to do a video here on it, so I definitely love doing this one.
Yeah, hey, we'll see how this plays out. It'll be exciting.
This is Bert and Laney from the Dividend Diplomats.
Over and out.